Lost my mind, now I'm feeling so fine, cause I finally realized I don't need you. I'm feeling sublime, and you're watching me shine, and you realize it's time I don't need you. Now
Hey, this is Brooke,
Hey, this is Imani.
and welcome to another episode of Resources in the Valley.
Where you get your tools to make the most out of every day.
Hey, Imani, how is it going? How's your week going? We haven't met in a couple weeks, so how's it going? How's everything going?
It's going pretty well. Very, very, very busy. But I think we're breaking out of the confusion with the weather. A lot of people have been feeling that everywhere, where in the morning and at night it's freezing, but the middle of the day it's hot, so you don't know what to wear. So I think we're finally easing into just that consistent weather and being outside a lot more. So it's been really good, really busy. Definitely trying to stay a lot more active, coming out of that like winter hibernation mode. um, how's your week going?
We're going into winter hibernation mode. Everybody knows I was in North Carolina for a couple years. I moved back to Jersey, and this winter we have had no snow. Until March, we still haven't really had snow. However, still, like February 28th, it wanted to start like these trying to snow things. It's snowing. It's supposed to be snowing now. But this is like the fourth system since March 1st, and we haven't had any snow the whole season. So I'm like, Mother Nature, we're supposed to be going to spring. Not. We are going the wrong direction. But hopefully, like another week or two, this will all be over. Last episode we discussed, we did tax. We did part two of tax questions. So we all hope you all had time to reflect on your tax questions. We hope all your tax questions were answered. If they weren't, please feel free to send us an email. We will answer as many as possible. We also hope that if you have not had your taxes done, that you are preparing to have your taxes done quickly over the next 30 days. This is for all of my tax preparers who don't want to hear from you at the end of the season. No, we're starting to wind down into tax season. This week, corporation taxes are due on Tuesday. If you have to file 1120S, if you have to file a 1065, partnership returns, corporations, small corporations, your forms are due. So this episode, we're going to talk about business deductions. Imani will guide us and kind of pick my brain, but we are going to dive into business deductions, and we're going to discuss most of the common deductions. We'll kind of breeze over a little bit of everything as far as the business deductions go. But just a fun fact, 73% of businesses are single proprietor LLC. So they do file on a Schedule C, which is part of your personal return, which is not due until April 18th. So this episode is for our entrepreneurs out there, small, big, medium, but file on a Schedule C. Some of these deductions you will be able to take as a corporation. However, most of these are your Schedule C deductions that we're going to discuss this evening. Did you want to give us any feedback before we start, Imani?
Yes, I'm super excited about this episode because, as we've talked about over the past few weeks, we just plug in numbers when we do our taxes on our own, or when someone does them for us. We kind of people have different varying degrees of how hands-on they want to be, but I really like this idea of uncovering what's actually going on, so that you're not just pressing submit, or you're not just agreeing or disagreeing under, perjury laws, but you have an understanding of what you qualify for and why, or things you don't qualify for, and under which situations you might someday, if it ever applies. So I really am grateful to you for diving into some of just the what's under the hood when we're filing taxes, what's really going on there.
These are most, but not all, of Schedule C, different deductions and credits forms that go with the Schedule C. So you have your auto expense and depreciation, which is popular. Most people do know about that. Investment credit, energy investment credit, work opportunity credit, credits for effective disaster area employees, biofuel producer credit, research credit, low-income housing credit, orphan drug credit, disabled access credit, renewable electricity production credit, empowerment zone employment credit, Indian employment credit, credit for employer Social Security and Medicare taxes and paid, biodiesel and renewable diesel fuels credit, new markets credit, credit for small employer social pension plan, startup costs, and auto enrollment, credit for employer-provided child care facilities and services, low sulfur diesel fuel productions credit, qualified railroad track maintenance credit, credit for oil and gas production from marginal wells, distilled spirits credit, energy efficient home credit, mine rescue team training credit, credit for employer differential wage payments, carbon oxide sequestrian credit, qualified plug-in electric drive motor vehicle credit. This is the last year for that. Credit for small employer health insurance premiums, employer credit for paid family and medical leave, and ministerial credit. There's about 5 or 6 of those that I'm going to dig in and just give you all a gist after we go on to our phenomenal women of the week. But those are most of the credits that are available on the Schedule C, the sole proprietorship LLC that you file with your normal tax return. Imani, do you have any feedback before we go into the automobile expense credit?
One, I just find it incredibly interesting because people tend to only know about the credits that apply to them. So I think that is really interesting. Hopefully the list is helpful for our listeners to just look into further after listening to the podcast episode. Can you tell us more about automobile expenses and your actual credit you might qualify for versus how that compares to your mileage?
So this one is a fun one. It is a popular one. It does come up because a lot of people do have automobile expenses. However, there are rules. And these rules are not always known. So let's start with leasing vehicles. If you have a leased vehicle, you can claim your leased vehicle on automobile expenses. A lot of people believe that you cannot. Well, you actually can. However, the rule with the leased vehicle is you have to choose which one you are going to claim. So either you're going to claim the payment, and that's it, or you're going to claim the mileage, and that's it. And once you decide which either one you're going to claim, you have to stick with that the full time of the lease. So if your vehicle is leased for 2 to 3 years or whatever the term is on the lease, you have to report it that way for that vehicle the entire time that you have that vehicle. So if you start the lease off and you're doing a standard mileage, or you're doing the mileage that you're incurring, then you're going to claim mileage for the next couple of years until that lease ends. Okay. If you decide that you're going to do actual payments or actual expenses, which really with a lease is going to be the payments and that's it. And it's going to also be, even though it's the payment, let's also correct this. Even though it's the payment, it's the percentage of the payment that allot to the business. Let's say that one more time. It is the percentage of the payments that allot to the business. For example, if you had 1,000 miles on a car for a year, and you had 250, or we could say, let's say 500 miles. You have 500 miles that were allotted to the business. So 50% of your car usage is allotted to your business. So 50% of your annual lease payments will be your deduction. Or the mileage, the 500 miles times whatever the mileage rate is for the year will be your deduction, okay? And as I said before, you don't switch it every year. You have to stick with it, okay? So in that situation, if you do lease a vehicle, what I would recommend is, assessing what your mileage is for your business and seeing, which one is going to benefit you more. Is it going to benefit you claiming the payments, or is it going to benefit you claiming the mileage? And then choose that, and that's what you're going to stick to for the next couple of years for the term of the lease. Now, vehicles that are owned. The vehicles that are owned are a little different. You can choose your standard mileage versus your actual expenses. Same thing. So your standard mileage is whatever mileage you incurred for your business, commuting, etc. Let's talk about commuting before we go any further. Commuting is for your second income, not for your first income, okay? As a business owner, commuting can include from the moment that you leave your house, okay? But if you're claiming commuting and you work for someone, it's not for your first business, it's for your second business. So it's from the moment you leave the first business and you're heading to the second business. What is that commuting mileage? And whatever that commuting mileage, it is all deductible because it is to your second job, okay? Now, as far as businesses go, this is focused on businesses. But as far as businesses are concerned, you're going to do the standard mileage versus the actual expenses. So you're going to look at the expenses for the car. You're not going to include payments because you're going to claim depreciation against that vehicle, against that asset. Okay, and it's going to be payments. I'm sorry, not payments. It's going to be your gas, repairs and maintenance, insurance, etc., versus the mileage. Okay. One thing that we did see this year that was different from many other years is I've been doing taxes for 20 years, over 20 years, and I don't think I have ever seen the mileage rate switch mid-year. In 2022, the mileage rate switched mid-year. So this tax return this year is asking for your mileage for the year, total mileage, personal, business, everybody together. Then it's asking for your total business mileage for the year. Then it is asking how much mileage did you have after June 30th for the second half of the year. And that is because the rate is higher the second half of the year than it is the first half of the year. And that's because of inflation. We are getting ready to go into a recession. We are slowly going into a recession and a hard time for our economy, and things are pricey. Any questions, Imani?
Yes. Oh, man, whenever we run back the tax questions, I would love to talk about how a plummeting economy can be something that we can better prepare for. um, but yes, thank you so much for explaining that. I think it's also helpful if anyone's looking to get a new car, especially around tax season. Sometimes we want to go new versus lease. So now you kind of know what some of those, options would be. Um, so that's really helpful. Could you explain again, like if you work for someone, but if you have your own business as well, how to know how to file?
You're speaking in reference to the automobile expenses, right?
Yes.
Okay, so if you work for someone, that your original commute to work is not deductible. Okay. However, any mileage that you take from the moment that you leave your job and you're going to either a second job in which you're clocking in and working for somebody, or you're going to do something for your business, that mileage is deductible. So a lot of people don't know that that mileage is deductible. It is not the original mileage in which you signed up to work at your regular 9 to 5 job and you have to go every day. Unfortunately, you signed up for that. You chose that job, and that is you chose to drive that distance to work every day. Now, if you do decide that you're going to do another job on top of that, that additional mileage is deductible for you.
Wow, that's really awesome. Thank you so much for sharing that and breaking all the information down. And I hope that everyone else sees how valuable this is, because this would be countless days of Google searching and trying to cross-reference the facts that you find online, all that stuff. So having someone to break it down for you in English is a real gift. Um, Most of the stuff I haven't heard of till today. So you're welcome, podcast listeners. All right, well, let's jump in to our phenomenal woman of the week, Arnita Johnson Hall. Um, on Instagram, she's under the Luxurious Lifestyle Planner, and she has a few businesses actually. There's Luxurious Lifestyle Planner. There's A&B Credit. That's the credit consultation company that she has, and she's been doing that for the past 14 years. She has had the Achieve with Arnita Academy, which is a coaching service for aspiring credit consultants. And then, as mentioned, she launched the Luxurious Lifestyle Planner, and now she has Luxurious Lifestyle Planner courses for anyone who also wants to launch a luxurious uh, planner, um, with their own brand, of course. But anyone looking to start a planning business. And I am just so inspired by her, because one of the things that she mentioned in one of her interviews, she's done TED Talks on credit and financial consulting. But one of the things that she mentioned in her interviews is the importance of owning your story, which is something we talk about a lot on the podcast. So it's one thing to say, "Oh, I sell planners," or I sell tools that help people to budget better. But what makes your brand different from anybody else's is your story that only you're gonna have. And and I think she said that that's what catapulted her from living in Section 8 housing and losing jobs due to low credit, to now being a millionaire business owner who successfully helps so many people. One of the aspects that I'm most excited about are her cash envelopes, because I've seen these from a ton of different um, users. Like basically everyone in the finance space releases similar products, but I really like her cash envelope because it's kind of old school, but this is how my brain works, where you can actually write your beginning balance and how you're doing. If you're anything like me, I write it in the notes app and then I lose the note promptly. It's like it never happened. So I just love how she's kind of thought through the process. If you're a busy woman running through life, or if you're a busy mom running through life, you can keep up with yourself and your spending habits using her resources. Brooke, did you want to chime in?
So Imani blessed me with this planner. And I have not heard of, I've never heard of Arnita, unfortunately. I, as I said, I'm terrible at social media and online platforms, so please forgive me. However, the reason why I wanted to discuss her as financial, as our phenomenal woman of the week is because this is an excellent product. Okay, this is the lifestyle planner. It's a hard book. It folds, bends back with a rind cover, so that way you can write. Okay, makes it very easy, very doable. And it's gorgeous. Okay, she has the envelopes. She has a cute little notebook for you to write and kind of journal. Okay, and then she also has some highlighters in here. She also has this book. Okay, and the reason why I was very impressed, even by not knowing who she is, okay, is because of this package and the way everything is together. Okay. The fact that you just listed her businesses and they're all connected also impresses me. And it's not even that it impresses me. That's what you should do. Okay. That's what any and everybody should do. All your businesses should kind of flow and connect into each other. So if credit is her passion, okay, now she's written a book, she has a planner, she has classes, and she has credit consultants. Okay. In any business that you do, in whatever it is that you do, that is how you should expand your business. Also, the transparency in your story. Your story, your unique situation is what makes you who you are and is what is your gift to the world. Okay? And my first, in opening up this package, I realized right away once I saw her book, okay, she's focused on credit. Okay, she has money saving envelopes. Okay, she has different things in the book to help you kind of budget. She has places where you make goals to get your credit together, different things like that. She has savings goals and to that nature. One thing that I have noticed over the years is pick whatever your niche is, whatever your niche is. Whatever your niche is, stick to it and deliver it. Okay? That is what makes you. That is what will bring people to you. Okay? It doesn't have to be that I have my hands in all the pot. This is something that she also built. That's the other piece. How long has she been in business, Imani?
At least the past 14 years.
Okay. 14 years. Okay. I have been studying millionaires, billionaires, successful people for years and years and years. Guess what the rule of thumb is? 15 to 20 years. It is not overnight. It is not 6 months. It is not 1 year. Okay. It is 15 to 20 years. I recently heard an advertisement on somebody's site. It was a woman talking, and she said, yeah, I made my first 100,000 this year or in a year, but let's talk about the fact that I've been building this for 10 years. Okay. Like I've been working relentlessly at different things, opening different streams of income, trying all these different things for over 10 years. So it's not overnight. It's something that you have to work on. I am actually excited, very excited about my planner, Imani. Thank you. And I'm also excited to learn more about Arnita Johnson Hall. I'm excited to learn more about her. I'm excited to read her book, Trust. I'm an accountant. I do credit repair for my clients. So I probably know most of the things that are in this book. However, there's always room to learn. There's always room to grow. And also, as I read this book and as I go through what she's offering, I'm also going to take some tips for the things that I plan to offer in the future and, ideas on how to go about it. So, when we do these things, especially on an entrepreneurial level, yes, learn from people, but also learn their process. Review their process, review what they've done, review the foundation that they've built to get to where they have to get to, or where they want to get to. Anything else you want to add, Imani, about our phenomenal woman of the week?
I think that's pretty much all. I will say that one of the things that drew me to Miss Arnita before I was familiar with her brands and everything else is that she just gave off like organized, luxury, joyful femininity. And for me, when I follow people, most of the time I follow them because they have certain aspects of life that I want to emulate, so maybe I want to be happier, or maybe I want to be lighter, or maybe I'd like to become more organized. So I follow people who just clean all day and hope it rubs off on me. And I definitely feel that through following her, you will walk away feeling encouraged. You will walk away feeling most of all equipped. Because it's one thing to be encouraged and inspired. It's another to feel like you have action steps that you can take today to move forward. And Brooke has the hard copy of everything that this woman sells, but she also has a virtual copy for $19.99. So like I said, I think she is just looking out for everybody. Like, hey, wherever you are, no matter where you are, no matter what your budget is, you can start today, download this on your phone or computer, iPad, and get started. And it's clear that that's her ultimate goal, is just get started. If you need help, reach out to me. But in the meantime, get started. So I really am inspired by that, and I love it. And I'm glad you love it too, because I hope you felt that when you opened it, you immediately feel like, oh wait, I can do whatever I want to do financially because I have a system, a beautiful system to follow. Alrighty, so let's talk about some uncommon business deductions. So I see first that we have like work opportunity credit. What is that? And what are some other uncommon business deductions?
The work opportunity credit, employers use Form 8850. It's a pre-screening notice and certification request for the work opportunity credit. To pre-screen and to make a written request to their state's workforce agency to certify an individual as a member of a targeted group for purposes of qualifying for the work opportunity credit. So to break this down to layman's terms, how many people have been on state assistance before? Whether it's food stamps, Medicaid, or receiving some sort of cash funding. This is what this is in reference to. Employers receive a credit for hiring individuals that are receiving state assistance, pretty much, to kind of help them out and put them in a position where they're not going to need it as much. So employers that hire people in this situation will receive a work opportunity credit if they fill out the proper paperwork.
Oh, wow, mind blown. I think that's really interesting too, because when you work somewhere, depending on your situation, you may feel like certain things are an invasion of privacy and all that. So I think it's just really helpful to know what you're getting into. All right, let's see. So we have a research credit and an energy efficient home credit, which is interesting because there's tons of new builds these days with the smart home trend taking over. So, what is an energy efficient home credit and what is a research credit?
So the energy efficient home credit is to claim a credit for each qualified energy efficient home sold or leased to another person during the tax year for use as a resident. So the person that's going to claim this credit is a realtor. They're either going to sell or lease the home to another person during the tax year for use of residents. Owners do have, they can take this credit as well. However, this is more of like a credit for realtors per se. The research credit. The research credit is for increasing research activities in the company. If you haven't filed the income tax return making the election to claim the payroll tax credit, then you can't file the form. So this is, you're increasing research activities, but it's a payroll credit. So you're paying your employees to research activities, but you have to apply for it first, and then you can claim the payroll that you use to increase the research activities in the company.
Mind blown. Mind blown. All right. Well, so before we close for today, how can you break down for us what self-employment tax is like? So many people have started businesses like we've talked about over the course of the pandemic, and even before that. I think it's hard to keep track of what all is happening, especially once we start to become profitable in the business. It's hard to know where everything should go. So can you please break down for us self-employment tax?
So the reason why I wanted to discuss self-employment taxes is because I don't think people fully understand. Self-employment taxes are based, first of all, on your income, on your profit or loss for your self-employment. Let's start there, okay? So above the line, your profit and loss is configured, okay? And all of your expenses, well, most of your expenses and the deductions are taken into account, okay? And then based on that is your adjusted gross income, okay? And then it will bring you down eventually to your self-employment tax, okay, your tax rate. That tax rate is 15.3%. That is specifically for Social Security and Medicare, just the same way that people that have a W-2 income get Social Security and Medicare taken out. So it's specifically for that. It is for profit over $400. You have to have a profit of over $400. If your profit is less than $400, then this credit will not apply. It is not 100% of the $400. It is actually 92.35% of the amount. And then if you make over $200,000 generally, an extra 9.9% is added on. So it's actually over $200,000 for single head of household or qualified widow filers, or married filing joint $250,000, married filing separate $125,000. The the self-employment tax does give an above the line deduction of half of what the tax is. So pretty much your profit and loss is given, and then they calculate your self-employment tax, and then they give you like half of it back. Okay. People don't always understand that. So you still are going to pay your Social Security and your Medicare taxes the same way that W-2 employees and your federal taxes. You're still paying all of those things. You're just paying it differently. Questions, Imani?
Thank you so much for sharing that. That is, yeah, that's great. That's great. I'm so excited to see the future books that I'm sure are just on their way. Because I feel each podcast episode we've done, especially on finances, could probably just be sold as books. All right. So in closing, we always look at what are we going to do this week to meet our goals. And I think it'd be beneficial to, as you're listening, run through the episode, probably first just to listen and see what all is on it, but then two, go back through with a pen and paper and see which credits you have questions about, which you might be interested in, because if there's a credit that you have earned, you definitely want to capitalize on that, or at least explore those options. So that's going to be my call to action as a person just consuming all the information. And I'm guessing people listening are likely going to be in the same boat. What call to action would you recommend for our listeners?
Well, first, those that are business owners, you should be aware of these credits. The work opportunity credit per se. How many of us hire people that are in situations because we want to help them, but we don't even know how it can benefit us. So, be aware. Number one, be aware. Number two, know the things that you can take advantage of. And number three, go through it with a fine-tooth comb. One of the things that I've recently been saying is don't be afraid to make the money. I know people that are afraid to make the money. It's not about being afraid to make the money or make too much money or worrying about you have to pay somebody. It's more about knowing the things that can benefit you when you're making that money and the opportunities and advantages that you can take when you're making that money. So, as a business owner, it is advantageous to understand deductions and credits and the things that help you in your business and the income that you're bringing in. So we hope you all have a moment to review the things that possibly can help you in your business out. Take into account all expenses that you incur. No expenses too little, no expenses too big or small. And know that the options that you might be able to take that can benefit you.
Thanks so much again for sharing that. And I really appreciate it also because I think when sometimes people run into trouble or may want to withhold earnings, things like that, it may not be because they want to necessarily, but I think that there's just a lack of knowledge. There's like a huge gap between, my business not making money and my business now making good money, and what do I do to make sure I'm not just throwing all my profits at Uncle Sam, but what I do pay or what I do keep track of, etc. I want to have, like you said, terminology that I understand around it. I want to use my money wisely and make sure I'm not paying more than I should or paying less than I should. And I think sometimes it can really be overwhelming. So I am excited for all of our listeners to just feel more comfortable. All right, and with that, we're wishing all of you beautiful angels a blessed and productive week.
Guidance given during this program are only reflections of our personal experiences and is not a substitute for professional
Stay
advice.
faithful,
Change
not
is your
hateful.
choice.
I'm playful, cause he got me. He called me his angel. I'm flying to heaven. Just know that he sent me from heaven to flex, yeah.